whoever has listed those homes, or I don't even blame it on the person that listed the home. I blame it on the homeowner himself, herself. That they don't realize that the market is not interested in paying that amount. They're not going to pay what they're asking for because the home is not worth it.
We definitely need here every Friday with us.
Welcome back to another episode of the Real Talk Miami. I'm Luis Perez, joined as usual by Javier Gonzalez and Jasmine Mousse. We're three real estate professionals here in the Sunshine State, Miami, Florida, bring you guys the inside scoop on real estate trends, business insights, and financing. How you guys been doing?
Good. How about
Good.
yourselves?
It's a shaky day.
In Spanish, es viernes y el cuerpo lo sabe.
Yeah.
Seguro.
Today we got an interesting segment, Q's and A's. We've been asked many questions on Instagram and on other platforms as regards to the real estate market, as well as questions that we face day to day in our business. And so I believe it's important. To have these questions answered before you work with a real estate professional, because you're going to be better prepared in order to buy a home. It's not a simple process, you know.
Indeed it is. And sometimes people don't ask because they're ashamed or because they don't want to ask, don't want to look nosy.
Yeah.
But you should ask questions.
Not even nosy. Like, even sometimes you're ashamed because you think that it's a stupid question. Little do you know that everyone is in your position and has asked the same question multiple times.
Indeed.
So I think this is definitely the place to talk about the most commonly asked questions in real estate.
Absolutely. And this is not ChatGPT, none of that stuff. Sometimes that gives you the wrong information. This is real industry insights and experiences that we've had, in the years that we've been working in the real estate industry. So I don't know who wants to start us off with their first question.
Ladies first.
Okay. All right. A lot of people ask, well, I have a few questions written down, so let me see which one's appropriate to start the conversation. I guess a lot of people want to know what's a seller or a buyer's market. A lot of people they read different things on articles, they hear different things on the news, and so oftentimes they want to know what market are we in, and they'll hear I'm talking twisted today. They'll hear realtors say, oh, we're in a seller's market, we're in a buyer's market. So they want to understand what is it that we call a seller or a buyer's market. So let's start with the seller's market. Really, I think everything in real estate has to do with supply and demand. It's basic economics. But for those sellers, I think for the consumer out there, I think it's important for them to know when we talk about a seller's market, we're talking about little inventory and excessive demand.
Usually 6 months, right?
Correct. So it's so competitive. There's so much demand for homes, but there's so little supply that sellers have every right to raise their prices. So it becomes that much more competitive. And I think that's something that we saw a lot of during the pandemic.
Indeed. So you to make it plain, like a plain view, you take a scale. If you have the buyer side and you put more on the buyer side, so then the buyers have the odds to lose because there's more demand. But if you have more on the seller side, then the buyers are in better chances to get a better deal because there are more offering, just to keep it simple.
And that would be a buyer's market.
That would be a buyer's market.
So seller's market, there's little supply, more demand. Buyer's market, there's a lot more supply. Supply is in excess, and there's demand. But there's so many homes that buyers have a lot more room to negotiate.
You'll see properties stay on the market a little longer. You'll see more signs on the street, not only for sale, but also for rent, which right now in Miami, anywhere you look, any street that you go on, you're going to find at least one or two for rent signs as well.
Correct. And there's a lot of things that influence not just the supply of homes, but also interest rates, right? So right now, I think that interest rate are holding back a lot of buyers from purchasing homes.
Absolutely, because the prices haven't been going down as expected. We're 5 months into the year, and interest rates have been hovering for the last 3 months at high 6-7%.
And they're going to stay there because the Fed just announced it and there's no change.
They didn't change
So
the rates.
it's going to stay there for a while. So at least 3 to 6 months more.
Yeah. So definitely I think that's causing even more supply to stay on the market, and hence our current buyer market.
Yeah. That's a loose.
Another question that people don't really ask about the buying process, is just to keep it on the buyer side. What are the closing costs? How much do I need to have for closing cost? And that number is not going to be a steady number. It's not going to be a number that is not going to change. It's a variable number. It depends, like mostly on real estate, it depends on you. It depends on your finances. It depends on the house and the size of the mortgage you're getting. But you can be getting somewhere between a 2 and a 5% of what you're buying, correct me?
Yeah.
Correct. So you can be getting that number of closing costs, and you have to keep that in mind, because sometimes you might say, I have the savings for buying a house, and maybe you have 20,000 saved for a down payment, but you have no money for your closing cost.
Yeah, I think that's really important.
You gotta keep that on mind, because it's not cheap. It's not little money. It's a good money to keep in mind.
The good thing is there's solutions for everybody, because if they don't have the closing cost, they could ask the seller perhaps to pay for it, or maybe have the down payment be a gift and then pay the closing cost.
It's just important for buyers out there to understand that the down payment does not include closing cost. I think that's super important.
Super important.
Going into the buying process. No, go ahead.
Sorry. No, yeah, and there's also programs like in July 1st, the Hometown Heroes program is going to come back. They're going to give $100 million in funding. And that program helps you up to $35,000 or 5% the lesser of with closing cost. So in order to get the full $35,000 in closing cost help, the purchase price is probably going to be in the 700s or something like that. Most people that use those programs, they're not buying a house that expensive. They could be, but most of them aren't.
So since we're talking about closing costs and mortgages, I think that ties it into another question that I get often. What is the first step in buying a home? What's the first step? The first step is getting pre-approved.
Pre-approved.
How are you going to know how much you can afford or what your monthly payment is going to stay at? So I think that definitely... What is that face? I think that... I'm glad that my question is that intriguing. I think that a lot of buyers out there, they just don't know where to begin. I think it's very similar to when a realtor or just someone gets their license and they become a realtor. You don't know what's your first step. Where do I begin? How do I start becoming active? It's the same thing for buyers. They want to buy a home. Kind of like us, we want to be salespeople, but they just don't know where to begin. And I think I've heard it so many times. What's the first step to buying a home? And they think it's just starting to look up properties on Zillow,
to go on Zillow
on
and start
Realtor.com, and that's actually not the first step. It actually clouds the search process because you're looking at so many different properties in so many different price ranges, and then when you go and get qualified, you're gonna be hit with the hard truth. You can't afford the home. So first step, get pre-approved, not pre-qualified, pre-approved.
How many people have we saved from that heartbreak? When they go to get pre-approved, and the lender says you have to wait a year.
Sometimes you try to explain that to people, and people get a little mad for calling some way.
Yeah.
And they just want to start hunting for houses.
The problem
and it's exciting.
Yeah.
But people need to understand that if you find the house that you think is for you, and when you go to get the pre-approval letter, if you don't make it, it's going to be a huge disappointment. You might be even disappointed again.
The problem is a lot of people go online and they try to do like these self-reported pre-qualifications. Because I learned this the other day from somebody. I'm not going to name the company but it starts with an R and it's mortgage. So he gave me the pre-qualification letter, and on the income and assets it said it was self-reported, and I was like, okay, if I give this, it's probably not going to fly with the selling agent, the listing agent, I should say. because you're self-reporting. It hasn't been underwritten and it hasn't been reviewed. And so that is the part that we come in and we save you the most time. We work with Banker's Choice for most of our cases. Abeto Go, who we've had as a guest, he has a team that looks at the loans. He has the underwriter, the loan processor, all in office, 24-hour fast approvals. I've had DUs in less than 2 hours sitting with a client and submitting an offer right there in his office to the realtor, and I've had success doing that.
And I think not only it's important for you guys to understand, it's not just important for your peace of mind, but also when it comes time to present an offer, it strengthens the offer so much more when you accompany it with a pre-approve or an approval letter. It's just so much more stronger, and this comes in handy when we're in a seller's market where there's little supply, there's a lot of demand. Your offer is going to stand out much more, coming with that approval letter.
Agreed. I mean, what's next?
I don't know.
You have one?
Louis, it's your turn.
Your turn.
Oh, questions, okay. How do you determine the right listing price for a home? That's a very common one that sellers have. And there's no black and white answer. I believe that to determine the correct listing price, the first thing that we have to do is we have to look at the comparables in the area, and no more than a mile radius. If you could even narrow it down to your subdivision and have at least 3 minimum comparables for your property, that would work very well. In addition to that, we have to see the conditions to which your home is. Any improvements that you did that the other properties didn't do, we would either add or subtract based on that. If you have a pool, let's just say the pool costs $30,000 to $40,000, we'd work around that. You could also talk to other listing agents as well that have sold properties in the area to get information from them to see, what it is that led to that property selling for that price. Did it have anything unique? Things of that nature. It's not a very simple approach. Now, I will say this: the listing price at the end of the day is determined by the seller. We only could give you the best advice possible. I've had situations where I'll list a property for, let's say, $700,000. The buyer will see that there's demand, and all of a sudden they want to raise the price $60,000, $70,000, and then obviously it doesn't end very well. But you don't know until you actually test out the market.
There's an emotional side on listing your house and having this firsthand. We were talking about before you get here. There's an emotional side that clouds the people's vision when it comes to selling their homes. I'm not going to say house, I'm going to say homes. Because it's where they built memories, maybe where your son, your daughter was born, and that has a value. So I think if you're trying to sell your house, I think you should take a cold shower. You should take our CMA, take a seat, walk around the block, read the CMA, because sometimes you send the CMA, you explain them, and the seller just, this is the price you're suggesting. Okay, I want to sell it. I want to sell it at my price. So take a walk around the block. Think it through, because your house may sit on the market for 6 months and not selling. And that's going to cost you more money and time that you maybe don't have.
You know what's funny? That actually just happened to me today. Because for a listing that I have, I did circle prospecting around the area, and I actually ended up getting somebody who picked up. And he actually told me he was interested in seeing the property, and from there he told me he was interested in selling his home. Perfect. Okay. I check out his house. I mean, I'm telling you, so many illegal additions. The kitchen was not remodeled. The floors were probably original as well. It's a decent house, but it didn't compare to the one that I had, the listing that I have at all. I mean, that house is amazing. But he told me, hey, Louis, I'm interested in selling my home. Can you do some comparables for me? But let me tell you something, man. I look at Zillow, I look at Redfin, I look at all these websites. I know what's going on. I think it's like my house is better than the other one. I think it's worth, I don't know, $900,000, something like that. I said, all right, perfect. Nice. So I do my comparables. That was last week. And then today, he finally answered me. He said, hey, Louis, how's it going, man? Sorry I haven't been able to pick up, whatever. But let me be honest with you, man. Do you think I could get what I want for this property? Because, my property is better than the other one. And I told him the truth. I said, look, man, You have an illegal shed in the backyard that's rented. That's not going to count in the appraisal. You also converted your garage. That's not going to count in the appraisal. Your home is not remodeled. But I told him everything that was wrong, and then I gave him an honest opinion as to what I think his property would sell for and what I would recommend him do if he actually wants to get that amount of money for his property. But at the end of the conversation, he was basically in denial. But he told me that we'd be in touch, but he's not ready to sell. He's gonna do things little by little and take it from there.
We did kind of like a mini seminar a while back, and there was a question from one of the members in the audience. The man had asked, he was like, "What determines the price of my home?" The question was something like that. And we were talking about seller or buyer's market. At the end of the day, the market determines your home's selling price. You can do the CMA. We can list it. We can end up listing it for whatever you want your home to sell for. Yeah. But at the end of the day, it's going to sit on the market long enough to where we have to start dropping the price. So we always recommend in the office every 2 to 3 weeks, if we don't see any activity whatsoever, any showing requests, any appointments, any interest in open houses and the social media or whatever it may be, marketing, we have to have a sit-down conversation and we have to reevaluate the price of your home.
Absolutely.
So I think definitely at the end of the day, no matter what we say,
and you never
the market is going to prove us right.
You never want your property to sit too long either, because
once people start thinking something's wrong,
it's like buying art. Maybe the artist spent, I don't know, 2 years building a statue that's worth, and he thinks it's worth $2 million because he spent 2 years. Maybe for him it's worth, but it's not what it's worth for him. It's what people are willing to pay for it.
I was working with an agent yesterday. Actually, we were preparing a CMA for someone that she's working with, a client that wants to list her home, and we were looking at the numbers, and a lot of the properties that we were comparing them to, had been on the market for over 400 days.
400 days? Jeez.
400 days. And obviously, whoever has listed those homes, or I don't even blame it on the person that listed the home, I blame it on the homeowner himself, herself, that they don't realize that the market is not interested in paying that amount. They're not going to pay what they're asking for because the home is not worth it.
Yeah, but it's a 50-50 because...
We're not talking about the client of the agent that I was helping. I'm talking about the comparables in the area, because we've mentioned this in previous videos. When you do a CMA, it's good to look at the active homes, to look at what's your competition, to look at pending homes, and to look at closed sales. And we were doing just that for this client of hers. But the homes that were active, I think half of those had been on the market for more than 100 days. There was a property I was just mentioning had been on the market for 400 days. The property is more than $200,000 overpriced, because I think that sellers still think that we're in those
and some people don't have
non-existent times.
Some people don't have that I guess you could say the need either. So
maybe but I think in that case it's a 50-50, because obviously you listed your house with an agent, and the agent has to sit with you and say, hey, here's the reason, the number one reason and the principal reason your house is not selling is pricing.
Yeah.
And you have to talk. We cannot force, and we don't want to force anybody, but there's no point in listing that house because it's not going to sell.
Yeah.
You know what I mean? Nobody's going to overpay for your house just because you want the money.
So, talking about selling your home, now let's flip the script. Let's assume that I myself am a buyer and I put an offer on this overpriced home and the seller rejects my offer. Commonly asked question is, what do I do if my offer is turned down? So I think a lot of people are interested in knowing what happens after an offer gets turned down. Well, there's 3 different options. You can either present another offer. The seller can counter, or you just discard the house. Some people sometimes are not prepared to walk away. They're emotionally attached to the property. But I think this is a really good question to go over. What are your thoughts on this?
Yeah, My approach would be the offer was, you said the offer was discarded?
The offer was turned down. Let's assume that I'm the home buyer.
Yeah.
I put an offer on XYZ property, and the seller says, or the agent, because you're obviously in communication with the agent, but the agent says, I'm sorry, your offer has been rejected.
Yeah,
so
but-
what do you do from there?
The first thing that you do, I mean, realistically speaking, is try to get information from the listing agent. Why is it that they don't want to, I don't know, counter? Why is it that they don't want to sell it to us? And you'll usually get, one of two answers. We have another offer that's better than yours, or no lowballs, something along those lines. And so from there, I mean, it's pretty much just game theory. It's talking to your client, asking him what he wants to do. Does he want to raise the offer? Does he want to, reduce the amount of days in the inspection? Or, I mean, there's so many things that you could do. But first, try to get information from the listing agent, I would say, and see what the seller wants. What does the seller need? Does he need to move out fast? Because maybe you put a closing date of 50 days, but the seller wants to close in 30 days. Okay. You got to work. We got to work together. We're transaction brokers. That's what we do.
Yeah.
Yeah, you gotta find the why your offer was rejected, and from there move on. See if you can negotiate something like closing date, and if not, keep hunting for houses.
Keep home hunting.
Yeah.
So which brings me to another question that I hear a lot. Should I wait to buy?
Oh,
I think that's the question of the month, of the year. Should I wait to buy?
that's the typical question you get every day out there: social media, phone call, text messages. I don't know. I'm not sure. I don't know if right now is the right time. Look, in the next 5 years, if your house is worth today 400,000, in the next 5 years the projection that's going to worth 480,000. So if let's say you decide, let's say you're ready, but you decide to wait 1-2 years, you're gonna get 20,000 or more over the price. No matter what people says out there, oh, the market is gonna crash, it's gonna happen this, the interest rates are gonna come down. Maybe the interest rates does come down, but if the interest rate comes down and the price goes up, what are you solving?
Yeah.
You're overpaying for a house you could buy right now. So the answer is gonna go back to what we have been discussing here so many times.
Yeah.
It depends on you. It depends on when you're ready. It depends on your finances. So many factors that are valuable from you, from Ruiz, from me.
Yeah.
Everybody's different.
I know what
I
you're
would
saying.
say
Time in the market is better than timing the market.
that's a good one. But I was gonna say
Marry the house.
the question was, that's another good one as well. These are all my
Jot these down, guys.
these are my quotes. But I mean, the only time that there's only one time when there's a right time to wait, and that is if you can't find a home that you like. I mean, it's the only time.
Yeah, but it's really not to find a home.
But I mean, why wait though? Invest in an investment property, and then you have passive cash flow.
I'm saying if every house that they see is completely ugly and they cannot envision themselves living in it, why are they going to force themselves to buy?
Okay, for living purposes, yes, I understand that. But
Investing, okay, yeah. That's
but
fine.
hypothetically speaking, it's always a good time to buy.
It is.
Take away the emotional aspect of it. Financially speaking, it is always a good time to buy. If we are just looking at the numbers,
That's a strong statement.
it is. It is. If you find the right opportunity, I think that truly there's always a time to buy. 2008 financial crisis, a lot of people lost, but some people won because they saw the opportunity, they saw the silver lining. It just depends on, and I think I've said this so many times, I think I've probably said it in every single episode, it depends on the person's financial means, etc. But if we're talking just numbers, if we're talking no emotional stance, just strictly numbers, I think that, again, I'm going to say your two favorite quotes: time in the market is better than timing the market. What is it? Marry the house, date the rate.
Especially if you're young, yeah. And marry the house.
Marry the house, date the rate.
No, yes.
Yeah, marry the house, date the rate.
Marry the house because you could always refinance later. So I think those are things that you need to keep in mind. I think that people need to be a little less dependent on social media. I think social media or people have become dependent on social media. What one person says, it spreads like
The funny part
wildfire.
is this is going on social media.
It is going on social media, but this is coming from our professional experience.
Indeed.
I'm talking about people who give advice that have no professional experience. So they're saying things because for them it is not the right time to buy.
Yeah.
And then other people get that idea or that notion, concept, whatever you want to call it.
And let's go back to personal finances. Let's say you have the money. You have the money for down payment, for closing costs. You have the money. You can afford the house, but you decide to wait because in your projections, in the opinion of someone, the market is gonna crash. It's gonna come down. It's gonna slow down. The interest rates are gonna come down, and you decide to wait 5 years. You know what inflation is gonna do to your money kept in the bank?
Yeah.
So the house is gonna overprice, and you are gonna have less money for buying. So your money is gonna worth less in 5 years.
So you better put that money in Bitcoin or something.
Yeah, you better do something with the money because otherwise, it's what we were talking in the previous chapter.
Yeah.
If you put money in a real property, in a real estate property, you're keeping your money away from inflation. Otherwise, you're making money every month.
100%.
That's why people keep buying houses and buying property and investing, because it's the only way to keep growing your money and not losing and fight the inflation.
Exactly.
What other questions, guys? I have a few other questions.
I have another one that is going to go back to one kind of previous question. It's how much can I really afford? How much can you afford? How do you determine how much can you afford a house? And I wanted to get into this question, although we already talked some about this, to explain people the relationship between your debt and your income, because it's really important to people to know because maybe you're making good money every month, you have savings, but let's say you buy two nice cars, good for you, and you have $10,000 in credit card debts. What's that going to do that to your income, to your qualification? What do you think is going to happen? So I wanted to go. How much can you afford? It depends on you. Maybe you can go over DTI, Luis, to explain a little bit more.
Yeah, I mean, the debt-to-income ratio pretty much looks as the principal, interest, taxes, and insurance that you pay relative to whatever it is that your income is. And so Fannie Mae and Freddie Mac, they both have their own guidelines. They both have limits as to how much it could be. I believe with Banker's Choice, it's probably like 43% or something like that. And yeah, like Javier was saying, if you make $300,000 a year, but you have $200,000 in student loans, you have medical, actually medical doesn't count, credit card debt, you have too many cars, and then you also have another house. If you rent the house out, you could probably use it as as an income property, and it'll count towards your income. All of these things will affect your qualification at the end of the day. But I would say a general rule of thumb would be whatever your income is on a monthly basis, divided it by 2, more or less is what the maximum that you could probably pay on a mortgage.
But I think we had a class yesterday with Go at the office, and it's funny because he mentioned something. Yeah, I can give you the number that you're going to qualify for and what your monthly payment is going to be. But the better question right off the bat is, how much are you comfortable paying a month? Because someone can qualify for $4,000 a month, and I'm going to use the same example. Let's assume that it's someone qualifying that has been living with mom and dad their whole entire lives. They're used to paying $0 a month. So when I tell that person, yeah, you can qualify and pay up to $4,000 every month, they're going to be like, hell no, I'm not going to pay that, right? Or I'm not comfortable paying that. So yeah, one thing is what you can afford to pay per month, but then really ask yourself, what are you comfortable paying per month? What do you want to pay per month? Yeah. So those two questions go hand in hand.
Absolutely. Yeah.
And also it takes into account so many different factors. And that's the importance of talking to the mortgage lender. Credit score, annual income, because just because you don't qualify for one program doesn't mean that you might not necessarily qualify for the other. It just depends what program is right for you and your current stuff. I think that's a really good question. I think a lot of people ask that question out here.
Yeah.
Good one.
I have one here that says, what makes a great real estate agent, and how can buyers or sellers tell the difference between what makes a great agent and a good agent or a bad agent?
I actually want to go a little bit into this, and I know it defeats the purpose because we're on social media. I'm gonna old style person. Like I feel like sometimes I'm in the dinosaur ages, even though I'm young. I'm part of the newer generation. But I mean, I was raised with grandparents, so I feel like I'm old school in a sense, and I feel like I personally give value to the old style communication tactics. I feel like a realtor who calls you once a week to give you an update on the status of the property, in the case that we're representing the seller, or even the buyer, gives you a call, sends you a text message, hey, these are the properties that have been sending you. These are the trends that I'm noticing. We're not getting much activity, or I'm not finding that many homes. Maybe we need to modify our criteria, or vice versa for the seller. I've done XYZ number of open houses. I haven't gotten much reaction. I'm doing this to market your property. I'm doing social media, flyers. I'm doing door knocking, cold calling. This is the activity that I'm generating. I feel like I value that in a realtor, or just in general, versus someone who, has thousands of likes, thousands of followers on social media, is very popular up in the social rankings, but then when it comes to that one-on-one, that personal contact,
no
communication, then I just feel like communication, but again, what is it that they're doing makes the person a better realtor. So I've gone like in a circle, but to me, I think that someone who keeps the client in the loop is a good realtor. That's what makes them a better realtor in comparison to other people, to the other agents.
Always an agent that caters to his client, no matter if it's a buyer or seller, is worried for fulfilling the needs. It's keeping in mind what your client wants and keeping him updated, like you said, of what you are doing to get the house sold, or what you are doing to find the right house for her, for him, or for his family. It's gonna show your client who you really are. It's gonna show your client how interested are you in helping them, because it's not about the money, it's not about the commission, it's about the work that you are doing to get the job done.
Yep.
It's what you are doing to get it done and get it done faster.
No, I think the clients can smell what we call in the business commission breath.
Yeah.
So even if you are going after the money, you're not going to be that much more successful, because you're thinking about the number, not about the person that you're trying to help.
Indeed.
You're putting your needs before theirs. So I think not only would I say communication is important, but I think a realtor's accessibility is also important, because if that realtor is accessible on a Friday night to answer your questions or concerns versus someone who turns off their phone on Friday after 6 p.m., right? So they're not accessible, they're not easily reachable. I think that's, again, is what's going to distinguish a very good realtor versus someone who's not as good.
Absolutely. Gonna have said it better myself.
Drop the mic.
We have time for one more question, I guess.
I have another question, but I don't know if...
No, go ahead.
I think a common question, I think that was a good question to end on. That was a good one. But do I need a home inspection? This can go both ways, right? Sellers can do home inspections before listing their home so that they know what the condition of their home is in. It just depends if you want to do it or not. But from a buyer's perspective, the contract protects you. You have an inspection period. There's a clause in the contract that specifies you have X amount of days to conduct a home inspection. And during that period, the buyer is protected. If the buyer deems the home not worthy, they don't want to proceed with the property, whether because there's too many damages to the home or it's too big of an investment for them, they can choose to not proceed with the sale. So I think that, yes, you should get a home inspection. You should know what you're getting yourself into. You don't want to leave things up to surprise.
The only people who would never get it, don't say ever. Most commonly found, the people who don't do inspections are usually like investors. They'll do 0 days inspections. Some even waive the appraisal contingency. They're not paying cash, but they'll waive the inspection.
But that's a profile of an investor.
An investor.
I was reading though that during the pandemic, like when I was preparing for the talk, I was reading that during the pandemic, a lot of people actually were opting out of inspections, not because they wanted to, but because of how fast the market was moving. There was not that there wasn't time, but number one, there was a shortage of inspectors. So by the time in a contract, it's typically, and I'm just going to give a number, everything varies based on the contract, but typically you'll see an average of 7 to 15 days on the contract for a home inspection. Because of the shortage of inspectors, there wasn't enough time to find an inspector to come during that 7 to 15-day period.
That's crazy.
And number two, there was so many multiple offer scenarios that in order to make their offer more competitive, they would just take out the inspection period, or the inspection clause. So those were reasons why people weren't doing home inspections. But if you can get an inspection,
they probably did that, and they just decided we'll risk. They liked the home so much that they were willing to risk to lose the deposit, but they'll still probably get an inspector to go there just to check it out and see if it's worth it or not.
Yeah, so definitely those were scenarios where they were doing it. But home inspection, I think, is really important.
Of course.
I read this example that says, if I'm gonna buy a used car, I don't take the seller's word for it. What do? You bring a mechanic.
A mechanic to
because
help
the seller is always gonna praise the home. You know, everything's in working condition. When it's convenient for them, they forget every single thing that's wrong with the property, right? Because it's in their convenience. So they won't tell you the truth. They'll actually, how do you? Oh my god.
What?
I can't say it because the phrase is at the tip of my tongue, but...
What phrase?
No, I can't. Forget about it. But long story short, they'll definitely make the house seem better than what it actually is. So you can't take the seller's word for it the same way you can't take the seller of a car's word for it. You got to bring the mechanic. You got to bring the inspector.
Absolutely.
And on the seller side, I will even advise some people with older houses to, if you can, try to inspect the house.
Yep.
Before putting your house for sale, because you might find some things that later are going to be used to negotiate your price down against you.
That's
so maybe
prepared.
you can, I don't know, maybe you can replace the wires. It's going to cost you money, but I think it might be worth to fix something so the other side cannot use it to negotiate against you.
Yeah, you already have peace of mind and you know what's coming, what's to come in the future.
Indeed.
So it's been a great session. I think we might have to do a part 2.
It's been a good one.
Yeah, there's too many questions.
Too many questions. I think maybe next time. I think we can do a part 2 and a part 3. We focus then on buyers and then on sellers. We'll just wait for you guys to tell us what questions you're interested in hearing. But before we wrap up, I think we got to thank our sponsors. We want to thank Century 21 Girard Realty for all of your real estate needs, whether residential, commercial, business opportunity. Feel free to give us a call. It's 305-264-6000. And for all of your plumbing needs, whether it's residential or medical, feel free to reach out to Lion Plumbing, our second sponsor. We would not be here without any one of those two of our sponsors. So big thank you. And I think that's a wrap for today, guys.
Yeah, guys, make sure to like, comment, subscribe, follow us on all platforms at The Real Talk Miami. Share this with a friend. This helps many people. Trust me, we do this all the time. These are the most commonly asked questions. And there's a lot more questions that we're going to answer in other episodes. And we'll probably do another segment like this. But guys, please like, comment, subscribe, share it. And we'll see you for the next one.
See you.